Hey crypto friends, for those of you who are new to the channel, my name is Garrett and welcome to Altcoin Radar. Today we are going to show you, or I am going to show you a super simple trading strategy, day trading strategy, using just the EMAs and the RSI indicator, and that is it, all right? Now, for those of you who love trading crypto and would like to try out the same exchange that I use on a daily basis, feel free to go ahead and try out the Blowfin exchange with the link in the video description down below this video. The big reason why I love using this exchange is because they allow anybody from anywhere to be able to sign up and trade crypto futures. So if you're from the United States, you can trade your crypto futures right here. This is actually the exchange that I've been using for the last 6 months solely, and I absolutely love it. So guys, before we actually go ahead and dive into this strategy, there's a couple disclaimers that I want to mention here first before we get started. So the first thing I want to talk about here real quick is this is just one strategy out of literally hundreds of trading strategies out there, okay? It's important to keep in mind that not every trading strategy works for every single person, and the reason why is because every single person has a different personality, and you typically have to find which strategy works best for you as a person, all right? Now, the other thing that I want to talk about here real quick is it is important to stay realistic as well, okay? You will not win every trade. There is not a single trader in the world who wins every single trade, okay? So me giving you this strategy has nothing to do with me saying that, oh my gosh, you guys are gonna win every trade and you're gonna get, extremely rich within a year or something like that. That's not what I'm trying to say here, okay? This is simply just learning a different trading strategy for you to try out to see if it works for you. All right, guys, so let's go ahead and check this out. So this strategy basically revolves around using the EMAs, the 20 period, the 50 period, the 100 period, and the 200 period as well. Now, in addition to using the RSI as well. And basically what we're going to be doing here is we're going to be forming our biases based off of price action itself as well, okay? So how do we do this? Here's the thing, all right? The first thing that I want to talk about here real quick is obviously for those of you who are completely new to trading, I know there's probably a few of you out there who might be watching this who are absolutely new to this stuff. What you want to do is you want to go to TradingView, set up your account, whatever, and then you want to go to indicators up here, and to get all of the EMAs, you just want to go to indicators and type in EMA, all right? And then to get all of them, just go to this one in the community that says EMA 20, 50, 100, 200 and click on it, and it will add it to your chart. And then from there you can go ahead and click on the gear icon and you can customize them to however you want. Now, the other thing you want to do is you want to add the RSI as well, and that's simple too. You just go to the indicators again and you type in RSI, and it's right here, our relative strength index, and you just click it and it'll add it to the bottom of your screen. So the very first thing that I want to talk about here real quick is you do not want to use this strategy when the market is sideways, okay? Obviously, you can see that's why I've got this this set up right here. Obviously, market is moving completely sideways. All the EMAs are right inside of the price action itself. You do not want to deal with that choppiness, okay? Stay out of that choppiness and just do not deal with it, okay? It's just simply not worth it, and stuff could either go both ways, and it's just way too risky to get involved with trading sideways action like that, all right? Now, what you want to do is you want to be going to the 1 hour chart as well, because the 1 hour chart is typically where we are going to be trading off of for this day trading strategy. Now, the first thing that you want to be looking for when using the EMAs is, first of all, on the very top here, we have got my blue line is the 20 period EMA, and then below it, we've got the 50 period EMA, and then below that, we've got the 100 period EMA, and then we've got the 200 period EMA as well. Now, the key thing here is when price usually gets up to the 200 period EMA in a bullish upswing, it typically means that momentum is extremely strong, and there could be a good solid uptrend coming up. And that is typically, as you can see here with Bitcoin on the 1 hour, what happened right here, okay? So a good spot to get into a trade, for instance, would be like right in this spot right here. Price kind of lagged right around, okay, so price was trading underneath the 200 period EMA, which is the yellow line, for the longest time. But then it started to go up, and it started to kind of trend in that area, and we're kind of dancing with the 200 period EMA for quite a while right in here. So that tells you that momentum is building, okay? This is all about price action right here. Momentum is completely building right here. Now right here in this spot, you can also see, if you zoom in, you can also see that price right here ended up coming down to the 20 period EMA as well. And then we had a cross right here between the 20 period and the 200 period. And that is good news right there. That is what we want to be looking for this specific setup right here, okay? That tells us typically that price or that momentum is extremely strong, and there is a good solid potential for an uptrend going to be happening here real soon. So you would want to get in on your long position, or if you're trading the spot market, just buy in right in this level right in here, okay? And the other thing that you can tell based off of that as well is you can see right here, for confirmation, you can look down right on the RSI down here, and you can see right in that spot, price ended up going down to the moving average, but it bounced right off of it back up to the upside. So that is good news as well. So there you go. That is good solid confirmation that, okay, an uptrend is starting. There's very strong momentum coming in, and it's a good spot to potentially go long right here. So if you were to end up going long here, you could have ended up staying in this trade all the way to, hold on, let me go ahead and delete this. You could have ended up staying in this trade all the way to the very top up here, and this trade would have netted you roughly around, let's see here, right around 14% without leverage. But if you're using like, I don't know, if you're using like, if you're using like 5% leverage, I mean, geez, guys, that's like a good solid, like, 70% or something like that you could have made just in this, within these 3 days right here, okay? Now, if you are looking to trade just, if you're looking to get in and out of trades within a 24-hour period or something like that, then you could have ended up selling way sooner as well, and I'll show you how to do that as well. So obviously you can see that once, let's say you entered right down in here where I was talking about, and let's say, obviously you're coming back down, you're seeing price kind of consolidating right here, and it is still above the 20 period EMA, okay? Now this is what's cool about these EMAs in an uptrend, okay? You've got the 20 period EMA. Usually in a big, solid, strong uptrend, price usually sticks above the 20 period EMA, okay? So as long as the price action is above the 20 period EMA, you're solid, all right? You are solid to stay in. Now, as you guys can clearly see, this candle right here ended up coming down to the 50 period EMA, but it did not close down there. It ended up retracing back up, and it ended up closing above the 20 period EMA. So that tells you right there that, okay, well, things are still bullish here. And then after looking at that, this is part of looking at price action and, looking at price action and basing your trades off of price action, because once it gets up to this level where my mouse cursor is right now, you can clearly see that that's kind of the peak right here of this consolidation zone that we were in, and we ended up going up past that as well. So again, that's another confirmation telling you that, okay, momentum is extremely strong right now, so I need to stay in this trade. So if you ended up staying in it, then you're just going to keep following price action as it stays above the 20 period EMA right here, and you're going to keep doing the same process. It consolidated right in here again, but it did not go below it, and it ended up going above it once again and staying above it, and ended up going even higher and higher and higher. So I don't know if you guys can really understand what I'm trying to say here, but basically a lot of it has to do with this 20 period EMA, at least for an uptrend anyway. If price action stays above this 20 period EMA, you are golden, you are solid, okay? So you want to keep an eye on that. Now, as far as in a downtrend, for instance, as you guys can clearly see, again, you're going to be looking at price action, okay? So how I would treat this is I probably personally would have ended up selling right around in this area somewhere. The reason why is because once I start seeing these downward momentum candles, that is what tells me that momentum is starting to weaken, all right? And you can see it on the RSI as well, okay? On the RSI, you can clearly see up here, we were extremely overbought. And then price ended up starting to, or even back here even, price ended up starting to go underneath the moving average, but it wasn't starting to go all the way down to neutral territory or anything like that. It was kind of hovering around overbought areas. So that tells me that, okay, momentum is still potentially there, and we could end up going up a little bit higher. And that's exactly what we ended up doing. Now, right here, you can see where momentum got extremely lost, okay? You can see we crossed over underneath the moving average in the RSI, and we eventually started to drop, okay? And we ended up dropping below the bottom peaks of these three levels right in here on the RSI in the previous little bit of a drop that we had in the RSI. So that tells me right there as well that, okay, momentum is really starting to drop and we need to get out of this trade, okay? So that is where I would have ended up exiting. And if you would have ended up trading that and you sold, like, let's say right in here somewhere, because obviously when it gets down to the 20 period EMA and it goes through it and you can tell momentum is being lost, clearly you want to get out of that trade. You would have made roughly around, obviously, as you guys can clearly see, 9.8%, okay? So that is good, solid profit right there, and that's without leverage as well, all right? Now, if you're still following this, you can clearly see the next candle after that ended up going down even further, and then it started going down further. Eventually, it hit the 50-period EMA, but it did not go past the 50-period EMA. So what does that tell me? That tells me momentum is still strong, all right? That tells me momentum is still strong, and the next candle ended up opening up green, and that would have been my confirmation right there to end up going long again or trying to go long again. And as you guys can clearly see, you would have profited again if you would have ended up getting up or getting into this one right in here and going all the way up to this next peak up here. That's roughly another solid 5% without leverage, all right? So I don't know if you guys are seeing this or not, but you can clearly make some decent money by trading with these moving averages, all right? Price aligns with these moving averages very, very nicely on pretty much all time frames, all right? But the 1 hour, I like to use the 1 hour simply because it's a good solid between the 4 hour and the daily chart, and I'm able to get in and out of trades within, 24 to 48 hours, which is very, very nice, all right? Now, in a downtrend, it's pretty much the same thing, but the opposite direction, and I'll show you that. So with a downtrend, you can clearly see, obviously, right in here, all right, price was above the 200 moving average, or the 200 EMA right here, but it started to lose momentum, and you can clearly see it in the RSI as well. It started to lose momentum very, very strongly, and you can see that right in here, all right? I mean, it literally started to lose momentum big time, and you can see that on the RSI, and that tells you that, okay, we are going to start dropping below these moving averages, and that's exactly what happened right here in this spot. So right here would have been a good, solid spot to place a short, all right? So if you would have ended up placing a short right in there because price action ended up going below all of the EMAs, you could have profited big time, all right? So let's say you placed a short right there, and let's see here, went down to this level right in here and consolidated, but it did not go above this moving average. So therefore, the bullish momentum is not back yet. Bearish momentum is still there, and because it didn't go above it and breach through it, we ended up failing and going even lower, all right? So obviously that's, what I'm talking about as far as it working in the opposite direction. And as you guys can clearly see, it happened right here again, and it failed again, and we dropped even lower once again. So if you were to have gotten into this one, you would have made a solid 13% roughly without leverage, all right? So it's literally as simple as that. You just have to be willing to really look at the charts and really look at the moving averages and really get yourself in tuned with current price action and what it's currently doing, okay? But overall, realistically, it's really not that hard. You just have to look and see what price action is currently doing. Like this right now, what I'm looking at right here, okay? With current price levels of Bitcoin on the hourly, all right? Price ended up coming back down and consolidating down to the 20-period moving average right here. And as you can clearly see, it's starting to go up, but I'm not going to go long yet. I'm not going to go long yet because we still have not confirmed that we are going to go higher here, okay? Now, I would not end up going long here until we end up breaching past this previous high point right here, okay? So once we breach past this high point right here, that's going to tell me that we've got some insanely good, strong momentum back in here, and it's going to be good for a potential long, and we could make some decent money from it going up even higher right there. All right. Now, if it gets up to this level and it fails to breach it and instead goes up and then starts coming back down again, that's going to tell me momentum is starting to kind of taper off, and I want to stay out of the market, and I'm not going to trade that. Okay. And that's the other thing I want to talk about too real quick as well, is you do not have to take every single peak and valley. You don't have to trade every single peak and valley. That's kind of the point of managing your overall risk as well. All right, so keep that in mind also. But other than that, guys, I mean, that's pretty much it for this strategy. It's pretty simple. You just have to get used to it. And the EMAs can tell you quite a bit about, the overall momentum of the market or of the current asset that you're looking at, and you can really make some decent money by trading with this strategy. So before I go ahead and wrap this video up, guys, if you feel like you enjoyed this video and got some decent value out of it, please make sure to go ahead and subscribe to the channel, hit the like button below the video, and leave me a comment below on your personal thoughts on this strategy. And for those of you guys who stuck around and watched this entire video throughout the whole thing, thank you guys very much. I appreciate all of you very much, and I hope to see all of you in my future videos.